TraderOutlook.com. How you doing, Bob? What's the next thing that we should be most concerned with to try and get some resolution for what really is starting to get to be a kind of a boring trading range here? What's next?
Well, you're right. I mean, we've got what I would call price volatility compression. As fancy as that sounds, it just kind of means we're going nowhere right now in the S&P. And I was really happy to see us bounce off the 50-day moving average. That was a significant target based on some price divergence that we had. We had higher highs on a daily chart, and we had lower momentum, meaning there's a correction coming, and that correction, to me, reaches the 50-day moving average and then rebounds. And so that's kind of what I'm hoping to see in the ultra short term. But volumes have been light. The action hasn't been there. We need some drivers. I'd like to see some existing wholesale strength and just some stabilization in the currency one way or another. But I am speaking from a point of wanting to buy the equities. I'm just looking for a reason to do it.
Yeah, so there's some other interest. We got to watch, obviously, the commodities, gold and silver, but also the 10-year. And I'm not sure what the equity market finally keys off of. Do you have any idea?
No, for me, the commodity sell-off is good. It needs to kind of relax a little bit. The oil sell-off was starting to show up in U.S. consumer spending. And, you know, this has been the story all year for all of 2011, that the first quarter could be good, and then somewhere in the late second quarter, things might start to slow down as we started to unwind QE2. I don't believe there's a possibility of QE3. At least I hope there's now, from a perspective of longer-term health of the U.S. economy. So I think this has been the story, and traders are responding to that. They're looking for a reason, and I don't know what that necessarily may be. Having said that, jobs have leveled off. You expect a little bit of a dip in the economic figures, and we've gotten that. So I really think we're building a base to go higher. It's just we need some triggers. I think stronger jobs numbers will do it, and we don't have really significant numbers coming out for a couple of weeks.
You know, the story we were just talking about before we went to break with the IMF story, I mean, the one way that it does become pertinent to us is that negative externalities in this business, we have no idea what the next one is going to be. I mean, the FT, it's on the cover of it's on the cover of all the business papers as well, because suddenly we're right in the middle of Greece needing more, and you know, things not that so great really in Ireland or Portugal. The guy right in the center of it, who is manning the ship, this happens. I mean, it's just, that's why I'd never try to write. You know, I'd never try to predict what the next key for the market is going to be, because, you know, you just have no idea when stuff like this can happen. This is surreal, isn't it?
Imagine if this were like, I mean, one of the guys who was running the bailout of the United States in the middle of, you know, talking about the too big to fail, you know, if one of these guys all of a sudden dropped out of the picture, what would that mean for market confidence?
You hear guys say this all the time, that uncertainty is the biggest enemy of the market. A small correction is not. Even a bear market isn't necessarily an enemy, but it's what keeps the everyday investor out of the markets now. And we've had swings like this for 18 months. I mean, it's been insane for the regular investor to think that this is where to put their money for the long term, but it really is. I mean, even given the performance over the last 10, 12 years, to me, U.S. equities is still the place to invest over the long term. But again, having said that, uncertainty is just, we've been ripe with uncertainty every single week. There's something, and I don't blame the retail investor for staying out.
Yeah. All right, Bob. Thank you. We got to run.
Thank
Thanks.
you, guys.
All right, see you.